Hello, hello, hello. Test, test, test. Audio's good. Video's good. I imagine this will actually be a shorter stream than normal. Just because there's not a whole lot to talk about. But we'll wait a minute or two, see if we can get at least 20 people in here, and then we'll get started. The numbers can, for whatever reason, Wednesdays are the lowest count days. And if it continues this way, I'm probably just going to scrap the Wednesday streams. Why would I be shadow banned on Twitter? You didn't see my post in your feed, really? Interesting. The one from 9 minutes ago? I mean, you could just turn your notifications on. I mean, I try not to post too much on Twitter. Like, I don't like to shit post. So, um, yeah, that way you can, have notifications on and you'll get dinged whenever I tweet. I don't know if you guys have noticed that, but I don't tend to interact with a ton of people on Twitter, and I'd like to keep the signal to noise ratio a little bit cleaner. Know what I'm saying? We're almost to 20. We got 3 more, and then we'll get started. But yeah, you can always go to my Discord and get notifications then. In Discord, I always ping everyone whenever I'm about to go live. So if you're interested in doing that, pop on over to the Discord and join. Boom. There you go. All right, we're at 20. Good enough. Let's get started. Okay, so we'll start with Dixie today. Dixie's finally doing the thing that I've been waiting for, and that is challenging this macro support. Before it was resistance, broken support, or broken resistance turned support. It's retesting support now, and it's finally getting the retest after, I don't know, multiple months of down. Now, whether it breaks here or not remains to be seen. We still have 2.5 days left on this weekly candle. But when we turn on our Bollinger Bands, we see it's really, really close to a Bollinger Bands breakout. We see a really tight squeeze on the B bands, right? And now we're starting to get a little bit of expansion on the B bands. And all we need for confirmation of this breakdown would be a close on the lower band. So we'll have to keep an eye out for the weekly close, but so far it's slated to do that. As long as it doesn't, completely nuke and it just goes down a little bit more, just a little bit, that would be the signal we're looking for on the dollar index. All right, so make some notes. What do I want to do? Let's do hashtags today. Dixie, boom. 1 weekly support maybe giving way. Or maybe, let's say, maybe breaking. Additionally, we have the weekly B bands teasing a breakout. Let's wait for the weekly close in 2.5 days. Note B-band's breakout would be confirmed by a close / attachment. Remember, we've talked about this concept a ton of times. The attachment to the B-band, close / attachment to the lower band. Other than that, there's not a whole lot we can say because we're in the middle of the month, right? The monthly candle. If we could get a close below this midline, cool. That'd be sick. But we're just too far out on the monthly to really do anything noteworthy. But on the weekly, we can start to get a little bit more insight. And of course, on the cloud, it's still looking bearish. But we're just like, we're not quite we're like 99% of the way there. But that last little 1% matters because you don't want to front run a weekly close when it still has half of its life left on it. So, you could easily end up with something like this, right? That comes down, fakes a breakout, and then bounces. And if this thing bounces, remember, dollar up equals everything else down. So we don't want to front run this and hope that that's going to be the case. Because if this thing does end up bouncing for the weekly close, you can get trapped in a lot of longs, and that would suck. But so far, so good. We just need to, be patient and, take stock of our notes here and watch it one day at a time. But so far, it looks good. Let's say, remember, let's say Dixie / dollar down equals everything else up. This is an 80 IQ reductionist view of the market, but it is a great heuristic to keep in mind. Cool. Other than that, there's not a whole lot else to say. I think we can safely move on to crypto because that's where all the exciting stuff is happening, right? Any questions about the Dixie stuff before we move on to crypto? Well, there's nothing terribly new here. So, this is Bitcoin dominance. We can talk about Bitcoin dominance in a minute, but let's go here. Okay, so last stream we weren't quite on the breakout just yet. We were close. We were in the middle of this daily candle here, but it hadn't closed yet, so we couldn't safely say it was a breakout or not. Today we can confidently say yes, right? We have a good clean acceptance here, and even have a nice follow-up candle here, and it's riding this upper band. Like, this looks good. Now there are some news events coming up that could sway this thing a lot. So this is really important to watch. And when we look at the lower time frames, like 4 hour, like we can see just how uncertain the market is. It's kind of just like gliding slightly down. It totally lost its connection to the upper band, and it just stopped dead in its tracks, right? It was going up, and it didn't pull back. It just went sideways. And I personally hate that shit. That's really annoying. Because it just ends up being like a coin flip. Is it going to do something like this? Is it going to do something like this, sideways up or sideways down? It's a coin flip, right? I don't like these kinds of low time frame setups, especially going into news events. And the news events, we have a bunch of Ethereum unlocking. I don't know exactly when that's happening, but it's today. And it will be slowly introducing supply into the market, right? It's not just dumping all of the ether, but it is unlocking over time. So, this could be bearish fuel. You can make an argument for a bullish thing that maybe people are over leveraged on their hedge shorts. And so we could see a push up to liquidate them. Either way, what ends up happening next, whether this is what's so annoying about news, whether it goes up or goes down, in hindsight, people will attribute the same news event to why it did that. So All we can say about news events is that it will most likely induce volatility. Whether it goes up or goes down, who knows, right? But it will definitely get the gears moving. Important levels that we're sitting at. We're currently sitting at the broken range support. Let me expand this a little bit more. So if we zoom out real far, let's get rid of these guys. Boom. Oops. Boom. 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 If we zoom out real far, we can see that this, although this is the lower boundary of the range here, I personally view this as like the real level to really give a shit about, just because that's where the market was pivoting a bunch. Like if we go back in time, we see that it was, it was just knifing through. It wasn't clean levels really. It was just knifing through, but getting bounces. And then finally a knife through this level, came back up and rejected it. So although this is technically the lower boundary of the trading range, we can see the market did have a bit of interest in that zone. This, in my opinion, is really the important level to keep an eye out on. And right now we're getting rejection. So, yeah. What does it say? The only ones that know how news will affect the market are apparently members of Congress. Yeah. Or, anyone else that's like an insider trading. But regardless, if we're looking at just pure trend, this thing looks good. We just really need to keep an eye out for something that would be outwardly alarming, like maybe this closes a bearish engulfing. See if I can find a prior example of that. Probably won't be able to find one on the daily, but let me see if I can find one on the 4 hour. So something that's like, I don't really see any here either. Here, something like this, right? So we see we're riding the bands, and then it gets rejected with this big ass bearish engulfing candle. And if that happens, that will most likely mean that we have some major stopping action, and we are at minimum going to go sideways for a bit. So if we look at the daily perspective, just imagine that 4 hour is here, right? And if we get some sort of bearish engulfing candle off of the news here, at minimum, that will most likely be stopping action. We will either go sideways or just reverse. But whenever we see early stage breakouts, we never want to see hesitance. If the market hesitates on an early stage breakout, that is a really bad sign. And usually that means we're going to go deeper and strike for some liquidity. So some examples of that would be here, for example, right? If we go back in time, actually, let's go back even further than this. So boom. Right, we see that the market is climbing on this upper band. It did have a little bit of a rejection, but it sealed the deal on a bullish engulfing. And this is objectively a bullish setup. But what we can see is that if we have a failed breakout, right, we have the nice squeeze. We have it runs to the upper band. We see expansion of the bands, right? If we fail a breakout here, that almost always means we're going to strike the liquidity below the range that preceded it. And here's an example here if we go through time. Boom. So it just clears out all the liquidity below it. So we don't want to see a hesitating breakout, right? We want to see clean breakouts. Now, a market that breaks out and retests and goes up, cool, no big deal. I'm talking about something different. I'm talking about when the market breaks out and then closes back below. This is not what we want to see. So if we see something like that, that would be an early indication of weakness in the market. However, right now we're good. I'm just giving you the warning ahead of time that, if we see this, expect this to happen. So say, for example, we break out, or we already broke out, but we see a climb back down and we close back below here, I would expect to see a run. Dude, my trading view, I think it's a lock. How do I change this locking thing? Oh, there we go. If it comes back down here, or if it closes back below here, you better expect that this is most likely going to run for this liquidity down here. So, I mean, there's a number of reasons you could argue that it would do that, but rather than just trying to crystal ball something, let's just play the charts, right? Charts right now say bullish. We are currently running into overhanging resistance. So if the market decides this is too much to tackle and we reverse, watch for the daily close below here, because if we do that, that's going to give us really strong vibes similar to the all-time high. So here's an example here, right? Boom. Boom. Right? And of course, the first thing it does is it runs to the level that clears it. Maybe it bounces, or maybe it keeps going down. But it almost always runs back down to the swing low that preceded it. Right? So in our case, that would be, you know, something like, let me get this stuff off my drawing here. That would be something like either here or here, or if shit gets real, maybe even a macro throwback to our neckline of our Head and Shoulders bottom. Like that could be in store. Yeah, there's a lot of things on the table if we close below. However, we are currently, B-band say we're strong. We're strong, but just currently running into macro resistance. All right, so questions here. Was the 2 weeks we spent at 28K before where we are now considered hesitancy? You're talking about, what are you talking about? All this stuff here? So all this stuff here? I would not consider this to be the market hesitating. This is just consolidation. Like, this is normal. Markets consolidate. Not anything super surprising. What I'm talking about is a hesitation on a breakout. So imagine you have this spring, right? And the longer this thing consolidates, the tighter the spring gets compressed, right? It gets compressed until it's like super, super tight. And then when you release the spring, it pops out. But imagine you've compressed the spring, it pops out, and it doesn't give you the force we're expecting, right? This thing is, people are expecting this to come up. However, a failed breakout where we come back down here or something like that, that would be the hesitance I'm talking about. So all that to say, those would be the early warning signs we need to keep an eye out for. So I need to, all right, so BTC is currently running into macro resistance in the form of the prior range support. So that'll be 30,400 or 30,400. 30,400 to 31,500. It says zone, 31,500. So it's about $1,000 zone between here and here. Prior support zone equals, boom. Daily B-bands trend is strong. And we see no sign of weakness yet as we continue to ride the bands. So riding the bands just means continuous attachment to the band, right? What else do we want to say about this? Keep an eye out for early warning signs of a prolonged pullback in the form of a failed breakout. A failed breakout would look like a strong move back below the breakout level. All right. Breakout level equals 29,185. 29,185 ish. Okay. Other than that, it looks really good, right? It looks really strong. I am interested to see how it handles this resistance. This is the first time we've retested it since, basically since the floor broke. Floor broke here, failed to get above it. It would be interesting if we actually rejected this. Because I think a lot of people are expecting this, at minimum, that high to get taken out, myself included. I'm expecting this to get taken out. And whether it continues up or reverses remains to be seen. But it would be interesting if we never made it up there, right? So this is a really important level to watch because this is a liquidity pool. If we come up into this and reject, that would be a sign of maybe a prolonged pullback. But yeah, we are currently hitting resistance, and in general, it's not advisable to long into resistance. But if we clear this, bang, expect it to keep going, right? All right, so question, I remember you said if the candles move away the upper side of the cloud, it means the trend is broken. So daily cloud. The candles move away the upper side of the cloud. I'm not sure what you're saying. Can you reword that? The white clouds? The Bollinger Bands? These aren't clouds, but these are Bollinger Bands. Two very different things. Remember you said, so if the candle moves away the upper side, what do you mean by away? You mean away this way? Or this way? The general takeaway for B-bands, right? The general takeaway for B-bands is the indication of a strong trend is a trend that stays attached to the upper band, or at minimum kind of stays within. I'll show you like a little bit of a zone. You can make zones with your B-bands with 1 and 2 standard deviations. So like this, for example, would be considered a strong trend. Everything that stays in that little zone. Obviously, the strongest trend would be something that stays on the outer boundary. But as long as it stays like in this little shell in here, it's fine. But the way that you use B-bands for trend is, you want to see things, riding this upper zone, and the less it stays connected to this upper zone, the less strong. It doesn't necessarily mean it is weak. It just means that like maybe you get like a little bit of a pullback, like here, for example, and it comes back up. But as long as it's like in this zone here, you're fine. Like it's not a big deal. I mean, you can see this over and over again. Anytime the market kind of breaks this little zone here, it tends to go sideways or reverses or whatever. But that's usually the end of a trend. So here's another example here. Strong trend going down. It starts to violate this little shell, right? This little shell in here. And then it just makes a sideways market for the most part. Same thing here. Boom. So we see this over and over again. Same thing here. If it is not attached and moves away, the trend is broken. So I'm using the word broken, not in a sense where it implies it's going to reverse. I just mean that the trend either needs to consolidate before it moves up or is going to reverse. Like broken just means that like the momentum that was carrying it upward, the momentum's gone, or it's weakening. The momentum is weakening. But you can have weakening momentum and still have the market, so say you have something that's doing this, right? This is stronger than this, right? Because the slope is going higher. But if you have something that does this, right? The momentum, the upward momentum is weakening, but the trend is still up. So we have objective metrics when we look at the B-bands that say, is the trend broken? Is the momentum broken? Does it need to consolidate? Or is it just kind of doing something like this, where it like goes sideways for a little bit and then continues upward, right? What else? Oh yeah, so let's look at the daily cloud. Daily cloud looks fine. There is something a little concerning that is happening. Whenever you see the Kijun move up really aggressively and the price kind of hesitates, there is an opportunity for something like this to take place. Let's go back in time. Replay. So whenever we see the Kijun aggressively coming up and chasing after price, and price is kind of hesitating, we get these things that happen where the Kijun and the Tenkan cross, and sometimes they cross and then they recross, but that's not always the case. Sometimes it crosses, it recrosses, and then it's kind of just like fizzling out before it reverses. So we need to keep an eye out for a potential recross down here, because we have our cross, we have our recross. This is a continuation signal, right? Now, if the market comes up like this and our Kijun crosses here, that is a major sign of momentum loss, and we would look for the signal to recross before it continues upward. So in general, when we're looking at strong trends, we don't want to see the Kijun and the Tenkan that close together. We generally want to see it more like this, where it's just kind of like in the stacked configuration. Like this is a really strong trend. This is a really strong trend. And you can see as they start to crimp together, that usually induces consolidation, right? Consolidation. So if the Kijun aggressively pulls up and price does not continue upward, that would be a sign of short-term momentum loss. So we need to keep an eye out on this. We don't want the Kijun to pull up and then price to sneak below it. We don't want it to do something like this, where price sneaks below. Price sneaks below the Kijun here, right? So we need to keep an eye out on that. Don't get me wrong, it is still a strong bullish trend. So Ichimoku says strong bullish trend. Signs of weakness with the trend would take the form of a TK cross. This is a sign. It's basically like it's basically like a sign of divergence. Like the market's expecting it to keep going higher, but it just doesn't. And it would be a sign of short-term momentum loss. Let's say keep an eye out for the price to sneak below the Kijun. note, do not assume the price is going, or the price is going to reverse, but keep an objective eye on what weakness would look like. Okay. All right. Now let's check up on our weekly edge to edge, right? We had our 3 dojis. We have this push up. Cloud says still targeting this upper boundary, right? So everything is hinging toward a push to this upper cloud boundary at 43.3. So let's say daily. We'll do weekly. Edge to edge is playing out nicely. Still targeting the upper boundary of the cloud, upper boundary of the cloud at 43.3. 43,300. And when we look at the B bands, really want to see a close of the B bands, or a weekly close on the B bands. We want to see, that like quote unquote reattachment. So something that would look like this, but like, the bullish version of it, or something that would look like this. Actually, this isn't quite an attachment because it closed below the B band. It'd be something like this, right? See if I can. So here, for example, this would be a reattachment. This candle right here, or this, where you have hesitation just like a little bit, and boom, it reattaches to the candle. It'd be a strong continuation signal. Here's another one. B bands are set up for a strong continuation signal. Watch for the weekly close to reattach to the upper band. And right now, the price of the upper band is 31.2 at 31,200. Yeah. So because I want to keep everyone honest, there are some things that are slightly concerning, which could end up just resolving itself. So just take this with a grain of salt, but I do want to throw it out there. There are some signs of divergence on the RSI. On the 3-day candles, we see things like this with flat RSI, which is a sign of divergence. And additionally, let's go back to Coinbase. The volume is just tapering off out of nowhere, right? So, and that makes sense because we're running into this. Where's that? Where is it? Daily. Days. Boom. That makes sense because we're running into this, this level here, this zone. This guy right here. So, as the market climbs up, people are less likely to buy higher and higher. So, I mean, this makes sense. But the volume is notably low. So let's just say 3-day chart, or 3-day. some notable divergence on volume and RSI. Price keeps climbing, but volume is falling off a cliff while the RSI remains flat. So let's look at some other examples of when this took place. This similar characteristic took place, right? So this is why RSI divergence isn't the best signal, because here's a time when like it didn't. So here, for example, you see prices climbing higher, RSI is flat. But the thing that is really nice about this is when we get these peaks. We get these peaks here. So boom. You can see peak 1 is here. Peak 2 is here, and it's making a humongous divergence printed. But the thing about divergence is it can diverge like indefinitely. So it's not the best signal in the world. So here's an example of like this thing diverged for fucking ever, and it just kept making new highs. Look at this run. Boom. Diverge, diverge, diverge. I mean, eventually the divergence is going to, like, you got to pay the troll toll at some point, right? And this thing just punched its ticket, and then that's what had this mega pullback. Again, printed another divergence here. This is more in line with what we're seeing now. You see it. You see a divergence here. We see flat RSI. Volume is nowhere to be seen. And so that's why I'm specifically pointing out that's why I'm specifically like, hey, we aren't showing signs of weakness yet, just like we weren't showing signs of weakness here. But if it does show signs of weakness, this is what it will look like. And we need to be aware of it, because then shit like this happens, right? Like, you don't want to be buying the top and then just watching this thing plummet, because who knows where the bottom is, right? So whenever we see low volume, hesitating markets that make new highs on very low volume, you see diverging markets on low volume hesitate. It's not saying the market is going to reverse, but it's saying the conditions are ripe to. So all it needs is just that little spark in the powder keg to get it to reverse. So we need to make sure that we have a plan. If it does show initial signs of weakness, we need to have a plan, right? And a direction of where it's going. I want to make this note here. The downside of RSI divergence is it can indefinitely diverge. So don't just short every single divergence you see. So back in 2020, where'd my notepad go? The 2020 bull market diverged for months. I'll also say this, 2A, just because, how do I want to word this? Anytime, is anytime one word? Anytime? Someone check me on this. Anytime one word? The things you forget as an adult. Like there's no spell check on Notepad. Anytime, 2 words? Okay, sweet. Anytime we have low volume, diverging, hesitating markets, that we are at risk of a pullback. Does this mean we are definitely going to pull back? No. But if we see weakness, we should have a plan. And that plan can take multiple forms, right? Like maybe when you get something like this, you say, okay, I'll just hedge here. I'll open up a hedge, right? I'll open up a futures short, or I'll open up an options put contract or whatever. Something that gives you some downside protection. And then if it keeps going, then you go, okay, I close the hedge or whatever. Or maybe that means taking profit or whatever. Like whatever that means to you. I'm not going to be the one that dictates how you manage your position, but all that to say, if we get, like, reversals don't just nuke, right? That's not how they happen. They don't just one day stone drops. Like there's a body of evidence that builds up. It is now perfectly acceptable. That's what I thought. I thought it was maybe one word. It is now perfectly acceptable to write anytime as one. Fucking English language, man. Yeah. So all of that to say, this thing can diverge forever. But eventually, you got to pay the troll toll. You know what I mean? So here was a good divergence that played out. Boom. Divergence. Volume tapered off. Okay. Any questions about this Bitcoin stuff? Because then we can start to look at Ether and some equities and stuff. Longing into this this range support slash resistance should be sketchy to you, and you should be looking for reasons why that's a terrible idea. Because in general, it's a bad idea to long into resistance and a bad idea to short into support. Okay. All right. I think I've probably scared the shit out of you enough for now. Let's go look at Ether. So Ether is important to watch because the unlock happens today. And in a few hours. Oh, I see. There's an example of how to use anytime. When would be suitable for you to attend Schmidt's stream? Any time. What time? Anytime. Yeah. Okay. So Ether is really interesting right now because it has the world's biggest Adam and Eve double bottom. Okay. Oh my God. Keep in mind, it's not an Adam and Eve double bottom until it breaks out. But this setup is clean as shit. We see Adam and we see Eve. And the measured move for this thing is massive. Okay? 11,150. Or 1,150. Sorry. This would be the target of this move. if it breaks out. It's a big if. What do I expect for Bitcoin for the next 1 to 2 days? I mean, I just talked about that for the last 45 minutes, so you can rewind it if you'd like. However, anyway, with Ether, we have this humongous Adam and Eve double bottom. Okay, it's like 100% move or something like that, and it's currently climbing upward, and it has the right volume profile too, right? Like volume profile for Adam and Eve double bottoms tend to have decreasing volume majority of the time. The only thing that really gives me hesitance about this is, the obvious divergence on the daily. But the weekly looks okay, right? Like it's back inside the range. It is currently running into what is the equivalent for Bitcoin, the range low, right? So I'll have to draw a zone here. We'll use the weekly candles for this. There's a zone here. Something like that. Actually, I would draw this a little higher. Something like that, right? And we'll call this weekly range SR zone. And just like Bitcoin, it is currently running into this zone, which in general, it is not advisable to get long exposure. Oh, TradingView changed this view. They always change like little random things. Like things that like no one really gave a shit about in the first place. Anyway, in general, it is not advisable to get long exposure into resistance. But a clean weekly close above here, and that looks fine to me, right? It's currently kind of like if I slap this this zone on here, boom, 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 you can see it's just tracking along nicely. Definitely don't want to see this thing closing back below this inside shell, this one standard deviation B band. But I mean, trend wise, it looks good, right? Like it looks, it's got this edge to edge setup just like Bitcoin did, and it looks like it looks like the target of the edge to edge is really similar to the target of the Adam and Eve double bottom, but the target would be, boom, this guy right here. Let's make some notes for Ether too, because I know that's the other major thing that people care about. Ether. Weekly. Currently running into prior range resistance. Watch for a weekly close above 1985. 1985. 2. Weekly Ichimoku cloud has an edge to edge setup. Target equals 20. What is this? 20. I want to say 2,800. What's a couple bucks between friends? Painting the world's largest AE double bottom. And no surprise, the neckline is basically the same as the weekly's support resistance zone. Measured move is, I already forgot what I said, 1150, is that what I said? 1150, I'm a genius, is target equals $3,200. $3,200. Note, this pattern has not broken out yet and still needs to break the neckline for a confirmed breakout. When projecting targets via measured move, is it better to use the wick or the candle close? I mean, yeah, so it'd be more conservative to use the candle close, but I found the wick is fine, honestly. Technically, with Adam and Eve double bottoms, you use the wick to the neckline. But it's, I mean, these targets aren't precise, right? Like they're not, it's not like it's going to hit, you know, if it comes up to 3,100 or 3,000 and it's like, oh, we still got another $100 to go. Like, no, like as long as it's like within the striking distance of this zone, yeah, it's like, it's fine. And that's good enough. Could you show at least the notes you wrote on Bitcoin? My man, you know you can rewind this recording, right? Also, I post all of these notes in my Discord at the end of the stream. So once I'm done making the notes, I post them in my Discord. And if you'd like a copy, you can get them there. I can't tell. I can't tell if you're trolling, so I'm just gonna kind of ignore you. But you can rewind in real time the stream and go back and see the notes, or you can wait 30 minutes to get to get the notes. It's not that big of a deal. Anyway, what else do we want to say about this? Yeah, so there is this monthly Kijun, which is at 28.9, which is basically our weekly cloud. So there's a lot of reasons to, if we do break out, this is for, God, the arrow sucks. If we do break out on the weekly time frame, it's basically all directions are pointing here, right? Looks like getting more dumperinos. You're welcome. All right, so let's start taking some requests here. What coins do you want to look at, or stocks for that matter? What you want to look at? Can I go over Bitcoin? Yeah. You fucking guys are hilarious. FTT. FTT, is that still around? Oh, FTT's pumping because I guess FTX said that they found a bunch of money. I don't know how you find or recover $3 billion, but somehow you do it. But I would not at all be surprised if this thing tops out here. It takes out this local high and just goes, just retraces all the way. I mean, with impulses like this, there's not a whole lot you can say. There's no like technical analysis. It's totally, it's like, who fucking knows, right? It's 100% news driven, yeah. I mean, it's up 100% in like an hour. Most likely just gonna be a pump and dump. I would not be surprised if this whole thing gets faded. You want to see ape? Like Doge? Exactly like Doge, yes. Ape looks like shit, sorry to tell you. Just kind of like, just trending downward, right? It's tried to get inside the cloud, rejected it. It's trending downward. So look at this chart right here. This is exactly why you wait for closes, okay? This looks like a textbook Adam and Eve double bottom. Right? So if you just longed the breakout here, but didn't wait for the close, you would have immediately eaten an 8% loss. Immediately. So you wait for the freaking close, because that is going to confirm your breakout. Don't just buy price movement, because then you get your feelings hurt and you get stuck holding a dog shit coin like ape. Okay. If we get a 20% move down, if we get a 20% move down on Bitcoin, would you be interested in accumulating spot? I'm torn due to the uptrend, barely giving any participants an area to enter, but a down move would be strong. A down move from resistance seems textbook. It does seem textbook. So if it moves 20% down, I mean, what price is that? Let me see. Are you saying 20% just because, like, just throwing out a rough number, or are you saying that because you have a target in mind? So here's the thing, okay? This is 20 to 30% previous bull market dips. Okay, so this is why you got to be careful about that mentality, okay? We aren't this. Oh, this is not this. Okay? It's not this for a number of reasons. If we look at the cloud, for example, it's totally different situation. Now it could turn into that, but it's not there yet, right? And 20 to 30% pullbacks are only going to bounce if you have massive momentum, and we just don't have that, right? If we look at the weekly, for example, like, we're still here. We haven't broken out of the weekly cloud yet. So I would be really, really careful about buying a 20 to 30% pullback. And the main reason why, okay, is if we pull back 20 to 30%, that would be a head and shoulders bottom failed breakout. Okay, so here's our head and shoulders bottom. Boom, boom, boom. It had this crazy breakout, which head and shoulders bottoms don't normally break out like this, but it did anyway. And if this thing comes back down here, this would be a bull trap. Basically the equivalent of what this thing just did on a much higher time frame. Right? He goes, oh, the Adam and Eve double bottom is breaking out, and he goes turbo nuke back down. That would essentially be this on a higher time frame. So we look at like the weekly, for example. Actually, let's look at CME futures. That's a good look. So CME futures kind of cleans a lot of this up. If this thing comes back down and closes daily candles back below this neckline, believe it or not, that would be a strong sign that we're going to gun for this thing. Rather than having a 20 to 30% pullback, what would be ideal in my situation, or in my view, rather, is it comes down here, accepts the neckline, and bounces. If this thing closes down here, I think the whole market would unzip, and it would aggressively hunt for this head. Aggressively. So I would be really hesitant about buying a 20 to 30% pullback anywhere in here, because that's a failed breakout, and it could get really ugly really fast. Like, I think it would see a pullback that's very similar to this. Boom. So if we look at this on, you see how it had this failed breakout and immediately hunted. This isn't the same situation, right? Because it's not a head and shoulders bottom. This was a head and shoulders bottom. Boom, boom, boom. But okay, so here's an example of a good pullback, right? Here's your neckline, something like that. Market breaks out, pulls back, and bounces. What we don't want is we don't want this to come down and close down here, because if it does, it is gunning for this head more likely than not. We see this a lot on lower time frames, where we let me see if I can find an example here, where sometimes you'll make a head and shoulders like this. Boom. It fails a breakout and it closes back above. It almost always clears the liquidity above the head. Same thing on head and shoulders bottoms. Boom. If it does this, it almost always guns for the head. So that would be really sketch. If we say for some reason we actually do just turbo nuke down here, be mindful of how it interacts at this 25. Well, so this is futures. What is spot? Spot would be basically here at 24.3. I'll be watching this zone like a hawk, because how it interacts there is it's really gonna dictate where it goes next. It's kind of like the fake range breakout. So if it goes into the range, targets the opposite end. Yeah. So it's all just a liquidity play, right? Like, if you got long anywhere in this head and shoulders bottom, if you got long anywhere in here, where is the logical stop you put, right? Maybe you put the stop under the shoulder, right? Maybe put the stop under the shoulder. Maybe you put it somewhere down here. But almost definitely anyone with size that's playing a long-term play is going to be looking at this zone here. So it would aggressively trap these people down here. You know, it's just a liquidity play. It's a way to create maximum pain and squeeze the living shit out of bulls. I mean, look, if it pulls down, so let's say you played the breakout, right? If it pulled down to this right shoulder, and you're on 5x, this is liquidation zone, okay? If you're on 2x and it pulls down here, this is liquidation territory, all down here. So anyone with even a conservative amount of margin gets their ass handed to them. So we just need to watch. You know, this is all like if this then that, if this then that. So if it does come down here, just because it comes down here, that's not the end of the world. But if it gives up this support, dude, hold on to your ass, because I think it's going to aggressively take out that head. Nice to hear the bears here and there. I'm not a bear. I'm not bearish at all. What do you mean? I just got done talking about how strong the market looks. I wish it happens. It then huge long and retire. I mean, oh God. So, like, if we're going to game theory this, right? This is a logical place to reverse. Bang. Okay. The reason why this is a huge pain point already is because everyone who was bearish in here was looking for this level to get long in, but they didn't. So most likely what happened was they FOMO'd the breakout of this thing and stops are down here. So if this thing does pull back, not only do you have all the stops from the FOMOs, but you have people that are looking to buy this thing. But if people are continuously selling into this, you buy this with a stop where? Like, where do you put a fucking stop on this thing? You put like, where's the level you put a stop on? You put a stop under the shoulder. So if you bought the dip here, where do you decide you're wrong? There's no level anywhere down here. The next logical place is this spot here, which this is a humongous move from here to here. It's another 20%. So this is why markets, like, market activity happens like this, right? That's how things like this happen. It's because there's no cushioning along the way, and the market just unzips itself. And, so all that to say, I would be looking at this as a buy the dip opportunity, but definitely cutting all spot longs if it's showing any sign of closing down here, because exactly of what I just said. And especially if it closes a weekly down there. If it closes a weekly below this neckline, I'm out big time and looking for low or lower lows. I mean, the next level of support would be here, 11.5. That would be gut-wrenching. Absolutely gut-wrenching. But, I mean, that's a huge what if, right? I'm just saying, like, worst case scenario. Like, where is it going, right? Okay. I think I'll actually skip equities today. We're already an hour in. Numbers are fading. So just keep an eye out for that, right? Like, everything looks fine now. Like, I'm not trying to scare you out of positions. Everything looks fine now. But definitely keep an eye out on this level. Because if we start closing dailies or 4 hours or dailies down below here, almost certainly going to target this level here. Boom. And if that fails, that's going down to the neckline. And if this fails, well, that's what we just talked about, right? Okay, so yeah, we'll wrap it up here. If you want these notes, they're always available in the Discord. I'll post a link again. Go check it out there. If you're interested in joining my trading community, the Discord for the stream is totally free. You don't have to pay for the show notes or the recordings or anything like that. But if you're interested in having discussions about trades and stuff like that, and other premium content, then submit an application to my trading group, and yeah, I'll have a further conversation with you there. But if not, there's always a bunch of free stuff. No pressure either way. So we'll wrap it up here. Any closing questions before we go? All right, cool. All right, keep an eye out for Friday. I'll aim to do another stream on Friday around the same time. So, all right, you guys have a great rest of your week. Be careful because, we got a bunch of news coming up, and who the hell knows what the market's going to do, right? But, all right, I'll see you guys Friday. Bye.